Palantir Technologies does a wonderful job holding support in the 18s right now, testing a critical level of resistance that we're going to talk about here in a second, that if beat could push it past its 52-week year-to-date highs. In addition, we're going to be talking about some long-term growth metrics and key critical catalysts for Palantir that can help it become a $1 trillion company by the next decade. And then we're going to focus in, look at Palantir in the short term. Will we expect a pullback? We haven't seen it yet, but could one be coming in the future with these analysts that are releasing new fair value metrics? We have a lot to talk about today, so make sure you hit that like button, subscribe for daily videos, and of course, I'm not a financial advisor. Take everything I say with a grain of salt and do your own research. Now, if we pop it up on the screen today, let's talk about how Palantir has been trading and has actually even been surprising me personally by holding these $18 zones in terms of support. After earnings, I expected more of a pullback by now, but what we're seeing Palantir is actually undefying the bears. And in terms of what I mean there is at this 1820 support is where we're seeing Palantir starting to formulate a longer and a more fundamental level of support after these earnings were released. A key component about this $18.20 price target was this was the first resistance point after the Q3 earnings were released. And now you can see that is starting to become a fundamental support level here as you have nearly 4 touch points here in just the last few trading sessions. Looking on the vice versa perspective, what we're seeing in terms of a strong resistance point that was even tested today was right about the 19s. You can see we've had 4 touch points at about that 1920, which is a key resistance point that we're seeing in the short term. But also what we did today was test the 19s and was met by resistance as soon as we hit that. If Palantir is able to break out above the 19s, I think we could see the testing of its year-to-date high resistance at that $20, which is right here. This was right before the last quarter earnings were released, and then when they came in line, we saw that correction here between the 13s and the 16s, which is where Palantir likes to consolidate. I think if we see the 19 level being failed again, possibly if it tests tomorrow, we could possibly see a correction back into this area after things start to cool down post earnings, and if we see a correction that starts to capitulate on top of itself. However, Palantir is beating against that right now. So great job to the Palantir bulls that are actually holding this level in the $18 zone, which could make it more likely to test the 20s in the near future. Now, getting into the news here, you can see Palantir, like we've all talked about, we all know how their earnings went, was that they actually absolutely had dynamite earnings in terms of results. And looking into that, one of the biggest catapult revenue generators and valuation increasers that we've seen for Palantir is its future guidance in terms of 2024. And that is raising their revenue guidance here and also raising their adjusted income operation guidance even higher to $611 million and expecting GAAP net income each quarter to increase. And this is great because with the fourth quarter of the GAAP profitability, we see Palantir having the criteria met to be included in the S&P 500. Now, talking about that, we've had a large valuation update in terms of Palantir. Like I said, we're holding at the 18s, but what we do have are revised fair values that have been increased but are still lower than the current price metrics, which is why we could possibly see a short-term correction in Palantir after we have had a 30% launch in this previous week. Now, what we have here is estimated using this DCF model here is a fair value of about $16. And in addition, we have Morningstar that gives the fair value estimate here in the short term $13 per share, estimating a revenue rise of a 23% compounded annual growth rate over the next 5 years, as we're seeing an expansion in both government and commercial operations. And on the second half of that, with the commercial operations, is where we're starting to see the customer growth that is really starting to expand. And this is great because what you do have is with governmental contracts, and the CEO of Palantir has said this, is that these sales and business metrics can be a little bit lumpy. And with that, a diversification among their clientele is great because as their customer growths grow, this is important because if a single customer customer does back out, then you don't have a large shift in revenue. Basically, having smaller but more frequent or numerous people in the pool that are contributing to the revenue makes it less drastic when one of them decides to pull out. And that's what we're seeing right now. And you're seeing here with Cathie Wood that has decided to actually increase their potential and their actual acquisition of Palantir Technologies, as you can see right here, that the former now accounts for 1.3% of its invested assets into the ARK fund, which is managed by Cathie Wood. And we're seeing this with investors. The key factor that's really catapulting Palantir into this next horizon, which is why we're seeing possibly it reaching a $1 trillion company, is its ability to bring productivity and revenue through its AIP. Now, if you guys don't know what its AIP is, that is the artificial intelligence platform that was released about a little more than 6 months ago. And what this is bringing is diversification in commercial clientele. With that being said, and especially what's important with the AIP boot camps is that they have the ability to trial the software for free. This can help show clients that they can bring productivity and increase in valuations to their specific business. And not just looking at AIP for defense, but what's great about the AIP bootcamp is that Palantir can allow these possible clients to try this for completely free. And with that, they claim they can have a 0 to a use case within 5 days. And this leads it here with that 23% compounded annual growth rate that they're predicting over the next 5 years. This data analytics company can see its market cap estimated to reach 1 trillion within 11 years. And if we look at the current market cap of right now, it's only at 40.32 billion. So this is talking about over a 10x possibly over the next decade. And Palantir holding these $18 level of support right now is critically important to show where the long-term investors are really trying to put Palantir in terms of its current price targets, and even being criticized as being a highly valued stock right now in terms of its price to earnings ratio. It is a highly valued stock, and this is why we possibly could see a short-term correction after some profit taking starts to have a domino effect upon itself. But what's interesting here about Palantir is it's ignoring this, and it's actually defending against this profit taking capitulating event by holding this $18 level of support. And if they can continue to grow this is where we possibly could see the resistance that could launch Palantir into its new incremental valuation area, which is in the $20 range. So lots of exciting things to look at Palantir right now. We'll see if they're able to hold this $18 level of support throughout the week. And I think if they can, that is a success in Palantir's book, being able to hold that large uptake in valuation after the quarter earnings were released. But that's all what I have for you guys. Take care, peace out, and I'll catch you guys later.